Welcome to the Insurance Playbook podcast, the show where we pull back the curtain on the insurance industry, sharing stories, strategies, and insider tips to help you win in the insurance game. This podcast is proudly sponsored by Spark AI Partners. Now, think about this. 150 million Americans have no life insurance or not enough life insurance. It's a huge gap, and it's about to be disrupted. On today's episode, I sit down with Bryan Sims, the visionary force behind Mammoth Life, to talk about rewriting the rules of insurance, from using AI to expand underwriting data far beyond the old 5 data points, to empowering agents and closing the wealth gap in underserved markets. This man is on a mission with a massive goal. Stay tuned, because this conversation will change the way you see our industry. We are glad that you're here. Today, I've got Bryan Sims on here. He came from Wall Street. He was at JP Morgan for a long time, had a successful career in finance. Bryan, tell me about what took you from finance world to now insurance and giving back to your community. Tell me about yourself and how you got here.
Yeah, the Marvel origin story is pretty simple. So I had a traditional route through college, worked for a few years, went to business school after that. And there are only really 2 career tracks after business school is consulting and investment banking. So I ended up spending 25 years at, I like to tell people I'm a recovering investment banker. So my years were spent at JP Morgan and Lazard and Morgan Stanley, places like that. But there was always a pull for me to smaller businesses. Always. And I always resisted it because the track for so many that I was around was very clear. Put your nose to the grindstone, work 90 hours a week, don't ask questions, and take what they give you at every January. It's a nice life for some, not for me, right? Took a while to get there because it's scary when the money gets very nice to you and you get comfortable. But at some point you have to do the thing that speaks to your soul. So the thing that spoke to me was given to me, right, in a bunch of different anecdotes, Brenton. And one of them was getting an opportunity to work with a small group of really, really accomplished alumni from my business school alumni pool at University of Virginia at the Darden School. And they were pooling some of their personal assets to start to invest in University of Virginia alumni-related businesses. Not a new model. There are many, many schools, the Ivies, Super Ivies, they all have alumni groups that invest in their alumni's businesses as venture capital. They act as a VC. So I got an opportunity to kind of start that with these guys, and that led me down the path of finding some really, really cool opportunities. And what I realized was that people on Wall Street aren't smart and they're lazy. And I don't mean to be pejorative, but everybody I was meeting was smarter than, worked more nimbly, more effectively, and were working on really, really cool things that I had never seen before. So that experience led me to a business that I thought was pretty cool as well, which was trying to fix a few of the broken processes that exist in our industry. We have the most antiquated industry on the planet. Underwriting for life insurance companies largely consists of 5 data sets, zip code being the biggest driver of pricing. And I got an opportunity to work with, in the short stories, I got an opportunity to work with someone who looks like me, who economist, data scientist, strategist, we built the first platform, Brenton, that was to issue a $2 million instant issue policy, right? It was the first, period. So Ethos, Ladder, all these companies now that are instant issue companies, go to your phone, fill out an application, get 2 million of coverage in a half an hour. What we did was a precursor to all that. And it was really, really simple what we did. So we took a bunch of, and this is not, this is just basics. We took a bunch of publicly available data sources, aggregated them, some private, and aggregated them. So instead of 5 data sets that were being analyzed for an understanding of morbidity and mortality, we had 5,000. And that was culled from 5 billion data sets. And all we did literally was apply basic data science techniques, regression analysis, to those huge data sets. And we were at the beginning of the time when people were understanding what machine learning was, it being a faster calculator a more intense calculator that can do many, many more repetitions of calculations than a human could. So you can find pixelization and patterns, minute patterns within the data that the human eye would never pick up or would take years to do. So we use that kind of technology in its infancy to become, smarter than the average bear about who was going to die, where they lived, and how they were going to die. So that experience was very cool to me. I used my natural skill set as a business development skill set. So I went out and found all the puzzle pieces and found all the business. We took the company through an incubator called Plug and Play, which is the most active VC on the planet. And nobody really knows that much about them. They're fabulous, right? Fabulous guys. I really, really enjoyed working with them. But we developed some relationships that led us down the path of looking at and several opportunities. One of them really intrigued my current partner and I, which was we got introduced to the story of the tragic story of the minority-owned life insurance company. So I'll shortline this one, okay? The short story on that minority-owned life insurance company is that at the turn of the 20th century, Brenton, there were actually companies that they published science that underwrote against the lives of people of color and mathematically determined that my life was worth 1/3 that of majority culture people's lives. Mathematically, this was published and settled science. So that allowed them to, wow, right? I can send you the document. That's amazing to read this stuff today. But that allowed these companies to effectively redline communities of color all over the country. Those communities, in response, pooled their own capital in partnership, churches, captains of industry in places like Tulsa, Atlanta, Chicago, New York, LA, Seattle, all those places that were traditionally, I hate to use the term, but they were hubs of Black Wall Street, if you will. So there were communities that were doing for themselves. And so they pooled their capital in the first fraternal organizations that were just pooled capital to insure against basic wage law, weekly wage loss. So they created something called a 15-cent policy. So their agents would go from house to house to house every week and collect 15 cents. That 15 cents was pooled, and anyone who contributed to 15 cents, if they lost their job, they got sick, then their weekly wage was replaced. So that was the beginning of what became 40 some odd minority owned insurance companies over the course of the next 50 years. The second half of the 20th century was tragic because, as you know, lack of capital is the death of every great idea. So between competition and lack of capital for these 40 some odds, all of them went to zero. Every single one of them went to zero. So when my partner and I, Paul Ford, when we picked up this idea and got exposed to one of the two remaining of North Carolina Mutual, which was in liquidation at the time, now receivership at the time, now liquidation, and a company called Atlanta Life, which was basically a dead man walking at the time and needed a technology platform to reinfuse or reinvent their business or reimagine their business. So our platform was that for them. So we got exposed to this whole idea of this half of Americans being underserved, not having enough or any life insurance whatsoever. The derivative underneath that half of Americans, because it certainly does not exclusively apply to communities of color, it means that it is communities of color largely that don't have access to or to either broadly life insurance product or financial services product, or more specifically, affordable life insurance product. So I'm talking about the difference between the minimum of a $10,000 annuity and a $500 annuity. Those things did not exist. So my partner and I say, okay, we're not going to be able to work this out with any of the current existing brands. So we picked, and my partners in Louisville, Kentucky, we picked the Louisville, Kentucky version of that Black-owned insurance company, Mammoth Life and Accident Company, founded in 1915 by former slaves in partnership with churches, designed to pool capital in the community to insure against weekly wage loss. That company was mothballed in the 1960s. Our company is inspired by that company. It's called Mammoth Life and Reinsurance. So we partnered with the Historical Society that had all the archives for Mammoth. They were thrilled that we were trying to reinvigorate the brand. It gave us access to all that. So in all of our marketing materials, you'll see the connection between Mammoth Life and Accident and Mammoth Life and Reinsurance. You'll see that it's seamless.
Mm-hmm.
But we're on a tear right now to recreate both processes, and we're believers in the agency system. We're not direct to consumer. We don't believe in it.
Hmm.
We're believers in the agent and giving the agent better tools because there's from 10 years ago, the tools are smarter, faster, and better than they ever were before, giving agents technology tools that are inspired by machine learning, artificial intelligence that can remove some of the mundane pieces of what happens in a transaction between an insured, a buyer, and an agent and an insurance carrier, so that we can streamline prospecting, we can streamline administration, we can streamline CRM systems, we can streamline the actual application process, we can streamline suitability. We can actually place that at the front end of a conversation rather than the back end of a conversation. So now an agent's not worried about, is this person I'm talking to going to be able to afford the policy that I'd like to make sense for them to buy?
Yeah.
So that's kind of where we started. That's where we started with all of this. And what we realized is that there's an additional opportunity to become a version 2 life insurance company by taking risk on products that we create. So we're not a carrier and we will never be a carrier. Don't have an aspiration to be a carrier. Too much capital needed, too much regulation, and we have too many great partners who are willing to access our markets. They don't have any way to access our markets in return for giving us product that's customized. So customized for the market. They'll take the underwriting risk. They allow us, reinsurance, to participate in the risk of products that we co-create for them and distribute. So this is how we get to, Brenton, our large, big, huge, audacious goal. And I'll give you this, and I'm going to stop for a second because I'm giving you a lot here. The only purpose for having Mammoth Life and reinsurance exist is to aggregate capital to reinvest into these communities that are buying our products, period. So as reinsurance is a way to aggregate premiums that have to be invested according to an investment policy statement. But if you look at history, this is not a new playbook. Berkshire Hathaway began their empire with a reinsurance company. They aggregated insurance premiums, took moderated risk on products, they took underwriting profit and investment profit, and they plowed them back into, in his case, other companies like Coca-Cola. In our case, we want to redevelop communities with private capital. We'll bring public capital along, but we realize the equation means public capital first. And if we're able to be smarter than the average bear about who's going to die, when they're going to die, and where they live, we can go to economic powers that be and say, look, over the next 20 years, there's going to be X amount of death benefit that gets paid into these zip codes. These zip codes right here on your map. This
Hmm.
is your redevelopment roadmap right here. We know this much money is coming into the community. Do you want to match it? And by the way, we have an entire infrastructure behind us that is a development infrastructure. So we can bring all the partners to bear and some of the capital to bear that is first capital in on redevelopment of these communities. So this project that I'm describing to you, the big audacious goal, is going to outlive me, outlive my partner, maybe outlive my children. But this is the way that we compress this wealth inequality gap in this country without giving anybody indigestion, because it's organic for us. We're not dependent on the government. We're not dependent on other people's money. We're dependent on our own efforts and redistributing the capital that gets made by my company into opportunities that actually create wealth for others over generations. I'll stop there. That's a lot.
Yeah, I've got a lot of questions and comments, but I mean, just rewinding, I'm blown away. I had no idea that that happened in the insurance. I know they have some regulations now that maybe that's not supposed to happen, but yeah, just the difference in race and everything that happened, that's crazy. And I'm sure there's a lot of listeners that just feel like after hearing you, they just want to get on board with whatever you're doing, because that's how I feel as well. I feel empowered, and just like your purpose is huge, which I love. I know we went over a lot of content there, and in regards to how Mammoth came, how you basically reignited this company, your purpose and passion. And then at one point, though, you mentioned that it used to be basically 5 data points. Now you've taken it to thousand. In terms of actual impact to an agent when they're going to write a policy, what did it used to be and what is it now? Like what kind of people or health conditions or things were basically just off the table that now they can underwrite with? How does that translate?
I understand the question. So I'll give you two specific examples, okay, of where pixelization and the density of data that we have access to has actually opened doors to product and caused some insurers to think about communities that were previously knocked out to reconsider. Okay. One, diabetics. The second's 1099s, right? 1099 employees.
Hmm.
So if I talk about diabetics, given that, I'm going to load a few things into your brain around this. So there is science and research that indicates that someone that is on a diabetic protocol of medicine is a greater is a better risk from a life insurance standpoint than could be a better risk from a life insurance standpoint than someone who is not, or a diabetic, certainly a diabetic that's unmedicated, not on a protocol, right? That's a knockout. But we have the ability now, real time, to pull people's HIPAA compliant, pull people's medical records.
Hmm.
And this is the scary part about it, right? For some people, is that geo tracking, which, a lot of auto insurance companies will give you a discount on that because they let you track. If we're allowed, not us specifically, but if the industry is allowed to track the movement of some of the insurers, particularly those in higher risk categories, we know when you're going to the pharmacy, we know which pharmacy you're going to. We know how long you're spending there. And if we have your medical records, we know with your prescriptions filled and how often is being filled. So we can make some assumption that you're on a protocol. We can
Hmm.
verify that your A1C numbers are within a healthy range. So now you look like every other person in the population. So previously, where an agent will run into this, are you diabetic? Yes. Sorry, bye. In this particular instance, there is a greater possibility that there's product available for that kind of person with a chronic condition that had previously been a no brainer knockout question, no ifs, ands, or buts. So that's just one example of the impact of data pixelization on underwriting. The other impact that from an agent standpoint is suitability. So if I can target using data, people who have a high proclivity to buy, meaning timing of births. Birth is always, look at your life insurance. You got to change your will. It's a perfect time to add on coverage or buy coverage if you've never had it. Change of job, different life circumstances that we can identify through public records. If I can help an agent target those folks in a period of time when they're most likely to buy, guess what happens to their close ratio?
It's going to
It
skyrocket.
goes up. If I can combine that with data that says that gives me a pixelization of who this person is ahead of them calling, and I can replicate that 1,000 times for them, 10,000 times for them. And I combine that with tools that I described earlier that can define suitability up front for the product set that the agent has available. So now you get this really narrower set of high proclivity buyers that this agent is now set up properly to engage with. If you combine that with association affinities, right? If you've got representation with an association, now you're endorsed. So you combine endorsement with data enabled suitability for an agent and data enabled processes that make closing an application easier. Now you created a virtuous circle for this agent, and he's saying, okay, I'm getting paid whatever I'm getting paid to do this, but I'm closing more. I'm closing more. I'm closing more. So that's the impact we're trying to make for agents. And it's all possible, right? It's possible with the increased of the oceans of data that are available, and certainly the better artificial intelligence and machine learning, particularly machine learning tools that are available to us that help us identify patterns. I mean, particularly machine learning is effective in processing these oceans of data and helping us discover these kind of micro patterns that are not readily visible to the human eye, that allow us to be better about understanding mortality and morbidity risk. That's not where we hang our hat. There are people that are better today than we were then, so we don't feel the need to build it. There are people that are smarter out there that we have access to that we just partner with.
So you mentioned you're not a direct to consumer, you follow the agency model. Are your products accessible to any agents? Because you're essentially taking carrier products, right? And then you're adding uh, an aspect to it, which is the reinsurance aspect, giving extra benefits to consumers or better
Well, the
accessibility.
reinsurance has nothing to do with giving them better accessibility. That the reinsurance part is a separate line of business. So think about this: we're taking carrier product. Okay, we'll take carrier product. We'll feature engineer it because we have a few ways to feature engineer it to make it attractive. We can help a carrier understand mortality and morbidity risk better so that pricing is either better for, and all the products bracket filed anyway. So we'll
Hmm.
take a small segment of that. We'll feature engineer that small segment of it. We'll look to improve pricing so it's accessible for more people. And in return for that exercise, the carrier's now getting access to markets that they never would have been able to access. Not only because they don't look like the markets, they don't have anybody that's in their sales force that looks like the potential consumer, but they're not data enabled nor data enhanced to the point where they can target people with a high proclivity to buy.
Understood. So how does an agent get involved with Mammoth Life and that aspect to be able to offer these products to their clients?
So we've got a couple of partners that run our agency for us, who are the portal for that activity. Okay, they are actively looking for independent agents as downlines who are looking for bespoke product, who are looking to attach to an altruistic mission, who understand that the altruism and the mission has a commercial purpose as well, which is getting insurance into the hands of people who never had it before. They don't have to horse trade a book of business. They're creating an entire new book of business. And when I say underserved, that doesn't mean indigent. These people exist across the entire socioeconomic spectrum, from those who have a little bit to those who have a lot.
Hmm. Understood. Understood. Okay. Well, I think that's amazing. And like I said before, I love the purpose and where everything's headed. I hope it continues to go great for you. What are some of the trends that you're noticing in insurance and how are those affecting your business?
I see a lot of opportunity coming to us because uh, the stagnation of intellect that exists within some of the larger carriers, right? There's just a lot of intellectual intransigence that exists that will not allow them to be free and smart and think about how do they expand their books of business, right? Without going and repricing existing product, going and trying to poach, market share from other carriers. How do they expand markets when there's 150 million people in this country who don't have any life insurance? They're starting to pay attention now. They're starting to take a look at ways that they can partner with and market to centers of influence that will give them access to new markets. And I only say I will conflate new markets and underinsured for the purposes of this conversation because they're
Hmm.
all new entrants to the market. This is a trend that, if more people spend more, these large carriers are spending money, marketing dollars on it. It just advertises my cause. It does my work for me. There is no one else that looks like us that can serve these markets in the way that we can serve these markets. Now, we're constantly looking to develop more of these companies. There's 40, minority brands. We can't be the only one. There's one other right now that's owned by Magic Johnson and Equitrust. There can't be just two. There can't be. And our mission is not to be greedy, but actually to create more of these entrants, right? so that more people who look like us can get to underserved markets in more concentrated demographics, right? Concentrated geographic demographics. There should be one in New York. There should be one in Chicago. Every place there was a Black Wall Street or Hispanic Wall Street or an Asian Wall Street, there should be a life insurance company, period. It's a way to recycle capital in the communities that exist for everyone. The playbook is not new. It's not proprietary. It's only gated by access to capital, not smarts.
Yeah. So you felt like you were able to take advantage of the opportunity and also obviously make a difference because of your access to capital that allowed you to kind of get into this space. Is that what I'm understanding?
No, not exactly. We still have our troubles with access to capital, but the mission is solid. We have enough access to capital to achieve our mission. Certainly not as fast as we want. This is a completely scalable business. The more money you throw at it, the quicker and faster you can grow. And the ROIs that we can demonstrate on paper are more than adequate for any investment pool. But what we're in the business of, Brenton, is pursuing right now that the part of our business that is less capital intensive. The reinsurance requires a lot of capital and a lot of capital intensity on a regular basis. The distribution business does not. It just requires agents who buy on, that are going to make outsized commission, who want to sell product that's differentiated in the market. That's the model. That's the very basic lowbrow thing that we're doing. It's not different from what anybody else is doing. Our mission is different. We can go different places,
Mm-hmm.
and we can afford to incent agencies differently because we're not large and we're not bureaucratic. We're very nimble. So people can, if they want to partner with us, agencies want to partner with us, then we can be fairly generous with what we do.
Awesome. Awesome. Love it. Yeah, I love asking you about the insights in the market and trends. You can tell that you have an intelligent mind, and also with your background in Wall Street as well. I'm sure you're adept at analyzing markets and trends and seeing what's happening. So I think that's amazing. What would be for you right now the one problem that if you could just wave a magic wand and have that problem solved, what would that be for you to be able to help grow your business?
There are two things. Okay, there are two things, and they're not necessarily in this order. So it is agencies that we can partner with as downlines, and access to capital so I can grow the reinsurance business. The reinsurance business is what allows us to achieve that big audacious goal that I talked to you about earlier, about reinvesting into communities that are buying our product. It's those two things, and they're not mutually inclusive. They're not, nor are they mutually exclusive. So the independent business lines will grow our balance sheet through distribution organically. And at some point, there'll be some smart platform company or some carrier that says, hey, I want the market you guys are cultivating right now because I can't get to it. And they will come and they'll invest in some way. This is not outside of, it's not off the fairway for any of these carriers to do so. So we're open. We have a bunch of conversations that look like that right now, but we're focused, laser-like focused on distribution of existing products that we have and creating the bespoke product that I talked about, right? So that will be a bespoke annuity that's got lower entrance requirements. It's going to be about term and whole life policies, IUL policies with lower minimums, those kinds of things that we're going to be bringing to market over the next, call it 6 months to a year.
Yeah. Well, keep me posted. I would love to offer those because I've been in situations. I came from the door to door. I started in door to door life insurance. Wasn't door to. I mean, I bought leads, but essentially went door to door and helped people in their homes and was able to see a lot of that, face to face and know the struggle of the annuities and the minimums. I've been there where they couldn't meet a minimum, and I've been there with the diabetics as well.
So here's the thing that you you should think about, and your agency audience should think about. It's not only the product that we're developing that's attractive. We don't have that right now. That's 6 months out for us. What is a larger part of the value proposition for us is that we have access to these new markets. I've got association relationships that no one else has, where the leads, the cost of client acquisition, I can drive damn near zero because we're endorsed. We are the partner of choice. We're the broker of record. So we can afford to farm those leads to agents on a preferred basis and say, go close them. If an agent can sell, then an agent will have a higher percentage opportunity than they're looking at right now, just because our model is dealing with associations.
That's crazy that you could get near zero lead cost in the life insurance market.
That's exactly right. So the whole game, right, the mathematical game for a life insurance company is to drive the delta between client acquisition cost, drive that to the fore, and long-term client value, meaning how often, what is the value of that cash flow stream of premium payments that these potential insureds are going to make? If you can drive the delta between the cost of acquiring that client, drive that to low, and drive that value higher because you're selling them product that's actually appropriate for them, that can be staged over their lifetimes. So, scale to grow with them, then premiums are going to increase. Client acquisition cost is a sunk cost because you have it as a one-time cost. If you
Mhm.
minimize that, now you've got this big pool of delta, this profit that can be shared with the agent.
Yeah, that is huge. I'm just being blown away by uh, talking to you on this podcast, and am just so grateful that you were willing to come on here and share as well. What advice would you have for other professionals in the industry in life insurance that you wish you had had, or knowing what you know now, I guess, that you'd be able to give them?
Hmm. Know your why. You know why you're doing what you're doing. This is a difficult business. Life insurance is still sold, it's not bought. There's more no in it than there is yes. And still a ton of, and I used this term before, intellectual intransigence, that it kind of defeats reason for me. So there's a lot that you'll have to deal with in getting to your yeses that does not compute, right, with reasonableness. So you have to know what your why is. You have to know why you're doing what you're doing, why you're tolerating no's, why you're in this, doing this mundane grind of talking to 50 to 100 people a day to get a few sales. You have to know what your why is. Our why is really clear. We know at the end of the day what we're trying to achieve, which is reinvestment in these communities. We want to see communities self-sufficient. We want to see, underserved broadly, and it has nothing to do with racial classification. It has everything to do with economic opportunity. We want to see people in communities that have never had before. We want to see them survive. We want to see them thrive. It raises the bar for everyone in the country. You see the divide happening now. You see what's happening, and I'm not going to get political about it, but you see what's happening to, communities of color, particularly, that are being, threatened with deportation. That's going to have a direct economic impact on this country. If we are able to provide opportunity for people to make livings for themselves and support their own communities, then those threats go away, or at least those threats get minimized. Don't know who's next. I don't know whose community is next, but I know we can buffer against that by providing for opportunity that does not exist right now. That's our why. How we get there is a detail. I can take no's all day if I see progress towards that goal.
Hmm. Understood.
So for your folks, you have to know what your why is. This is a difficult business. It's not for everyone. The washout rate's astronomical,
Yep.
astronomical. But those who succeed, there's a thread of characteristics to those that succeed, and they
Hmm.
all know why they're doing this. Whether it's to feed their families, as basic as that, or they're trying to build empire, the kind of grandiose stuff I'm talking about. Maybe I get there, maybe I don't, but I'm not attached to outcome. I'm attached to the prop.
Yep. Yep. I think though it's important that that why includes, more of a purpose. Then the money will come. Just adding on that the more purpose we have, more long term we can stay in the game. And
That's
you know,
exactly right. Thank you for saying that simply.
yeah, yeah. I was on another podcast and they were mentioning just how many people try to get in here just for quick money and they're not doing what's right for the people. And I've seen a lot of that as well. Having the desire to help people, and then if you truly have that desire and can sell, then this is a very good business to be in.
It's a very good business over the long term. 100%.
Yeah, absolutely. Well, I I've been, like I said, blown away here today by your intellect. And wrapping up, is there any other things that you'd like to say here on the podcast? Any last words?
Just an invitation to your agents, go out and get in touch with us. If any of what I've said and what we've talked about resonates with them, there's a future to be built. There's a future to be built together, and we can do that. We need all types of agents in order to do that. We can't. This is not. You've heard a lot about the minority-owned angle. It's a feature for us. It's just a characteristic for us. It doesn't mean that we're exclusive to or exclusively trying to benefit. Not at all. We're trying to raise the bar for everyone that falls underneath that umbrella of I've not had enough opportunity. I don't have access to the same tools that the wealthy do. We're raising the bar for everyone. So I leave that message with you that if you have agencies that are part of your audience that are willing to attach to that kind of mission, please give us a call. We're very, very happy to entertain a way to work together.
Where can they reach out to you, or which number, which website? How do they get in touch with you exactly?
So they can go to www.mammothlife.com. All right. And they can just shoot us. There's only a few people in the company. So the info at email address doesn't go into a black hole. It goes to one of four people, which is either me, my partner, or the two guys who run our agency. So it's just those two things. That's the best way for them to get in touch with us, is to go through that website. Or, I even go this actually I'd rather them go through that right there so that we can get the right people in front of them and entertain their inquiry the right way.
Perfect. Perfect. Well, you guys heard it. Go to mammothlife.com and there's an email there that you can reach out to Bryan, get involved with him and his team, and be able to get on board with this movement that we've got going. So I appreciated the opportunity here to have you on, Bryan. And like I said, I hope everything goes amazing for you guys and the big purpose, the big, hairy, audacious goal that you guys have set and building that legacy. Um, and again, this is the Insurance Playbook, hosted by Brinton Atkinson, sponsored by Spark AI Partners. And if you know somebody that needs to hear this, an agent that's struggling, a new agent, anybody out there that needs to hear this, share it with them, send it to them in a DM. That's how this podcast gets out to everybody and how we can grow and get our listeners. So thank you, Bryan, and we'll talk to you later.